Hello, everyone, and welcome to the Friday edition of your Daily Five. I'm Joe Duarte, founder of Joe Duarte and the MoneyOptions.com. I'd like to thank you all for giving me the next 10 minutes of your valuable time. Today, I want to talk to you about the market at the edge of chaos. I want to ask two simple questions. What if the bulls are right? What if the bulls are wrong? After all, here we are well up from the market bottom with no sign of the most important catalyst of the rally, the Fed's liquidity infusions of money into the bond markets going away anytime soon. Nevertheless, as I will show in the next 10 minutes, there are things to consider that raise some questions. So today's charts are all about who wins and who loses if the bulls are right and what happens if the bulls are wrong. And let's look at the big picture. First, we have Fed liquidity, lots of money in the system, and that's usually a positive for stocks. Now we have this possibility of a COVID-19 economy that may be bottoming out. People are coming out of their houses, going back to work. And of course, winners and losers. So I want to start by looking at my first slide, which is, as always, the New York Stock Exchange Advanced Decline Line. I like to look at the market in terms of the New York Stock Exchange Advanced Decline Line because the algorithms that trade most of the stocks can't really distort this indicator. Therefore, it's very useful. So a lot of stuff in here, but let's look at it real quickly. We have the complexity zone, which is really the good zone. That's where stocks do well because the positive forces of the universe are acting on them positively. We have down here the chaos zone where there's complete disorder. That's where things don't go well for stocks. We have the edge of chaos, which is essentially the 200-day moving average, which is where the mix of chaos and complexity is just right to boost stocks and move them higher. We can see a couple of important areas here that are important reference points. We see that back in December 2019, when the New York Stock Exchange Advanced Decline Line broke below the 50-day moving average and subsequently below the 200-day moving average, we had big problems. And now we're seeing that a potentially similar pattern is developing. We have the advanced decline line actually above the 200-day moving average and the 50-day moving average, but it's running into the resistance of this downtrend line. If we can't get above that, we might have some trouble and head back into the chaos zone. So with that in mind, I want to look at 4 different stocks today. Number 1 is what I call the bad news stock, Campbell's Soup. So Campbell's Soup, when everyone thought that we were going to be locked down forever and have terrible food shortages, the stock started rising. But when the economy perhaps started to improve as people started coming out of their house and the lockdowns began to be cut short, well, Campbell's Soup has dropped. And now it's back at the 200-day moving average. And not only is that the edge of chaos, but if we look at volume by price indicator, what we see is that these 2 big bars here on the left tell us that we are not just at the edge of chaos, but at really crucial support and resistance. So whatever happens, excuse me, I have allergies, which is what my cough's about. But whatever happens at this zone is going to probably tell us a lot about what happens in the entire market. You can see that money has been flowing out. Accumulation distribution has fallen, and unbalanced volume has fallen. And we see that momentum is trying to pick up as ROC is moving up slightly, and RSI is near oversold. So Campbell is kind of at a decision point, to quote Aaron Swenlin. Now, let's look at what I call a good news stock, Dr.Horton. This is the largest home builder in the United States. This is a stock that I recommended to my service some time ago, and now that I own as well myself. So what's going on here? Well, mortgage applications are a lot better off than people thought they would be. So the stock has actually climbed very nicely. And again, it's above the 200-day moving average, which means it's in the complexity zone now. See that volume by price, again, at that significant big bar, which tells us that this stock can bust above that area, we're going to probably have some good economic news to go along. You see that accumulation distribution is fairly good. Unbalanced volume is improving. Momentum is a little bit neutral, and it's getting a little bit oversold. So this is, again, a stock at an important decision point. Next, I want to talk about the pure COVID-19 stock. This is Agilent Technologies, again, recently recommended in my service, and also a stock that I own. The stock has just broken out in a fairly dramatic fashion after some huge earnings beats because it makes the equipment that companies use to research DNA and things like COVID-19. So, they're selling reagents, machines, and all kinds of research software to help with this vaccine and cure thing. So what we have is a stock that, again, now in the complexity zone fully, and look at the volume by price. No major bars. That means if this stock can stay in this general area, the odds are very good that it could go up. Also want to see accumulation distribution perk up. Want to see unbalanced volume perk up. Momentum is clearly perked up. The stock is not quite oversold. My next stock, this is what I call a life goes on stock. It's called Incyte. It's a company formerly known as Incyte Genomics. Now it's just called Incyte. The symbol is INCY. I just recommended this stock to my service. And here's what makes this stock interesting. We have COVID-19. We have a lot of geopolitical problems. Incyte is all about cancer drugs. It's recently received a very powerful approval from the FDA for a lung cancer drug that's going to be helping a lot of people. And it actually has some potential COVID-19 used drugs, because some of the medications that Incyte makes can actually decrease inflammatory reactions, and that might be helpful in treating COVID-19. Nevertheless, Incyte, it has very little connection to COVID-19, but a big connection to cancer drug. And unfortunately, cancer is not going to stop. Therefore, companies that are doing well in that line of treatments are likely to do well, regardless of what happens. Of course, everything is relative, so the stock could get tanked as it did earlier in the year. But at this point, it looks fairly good. Here's what I really like about this one, though. The volume by price bars are not very big, which means that there's very little resistance in this price area. Furthermore, if you look at the Bollinger Bands, these green bands above and below prices, they're starting to close in. It usually is a sign that a big move of some sort is coming. And here's a couple of clues about which way the big move might go. Accumulation distribution, pretty good. Unbalanced volume kicking up, momentum kicking up. The stock's nowhere near oversold. So under the right circumstances, Incyte is a stock that can certainly do well during this time period. So what could possibly go wrong? Well, the New York Stock Exchange advanced decline line might fail to get above that line. We have all this election talk. Things are really heating up between Biden and Trump. That kind of stuff can really, really affect the market. Problems are starting to flare up in China with the trade war and all kinds of problems potentially in Hong Kong. And there's more geopolitical hotspots as some things in the Middle East are starting to heat up. So how do you survive in this market? Well, number one, keep a good eye on the New York Stock Exchange advanced decline line. If that line fails at the current levels, we're probably going to have some trouble. If it can break above that trend line, we're probably going to get some nicer gains in the market. The second thing is focus on good news stocks, bad news stocks, stocks that are COVID-19 related, and stocks such as Incyte, which have little to do with COVID-19, but provide products and services that are excellent at any time. So at this point, my time has run out. I want to thank you for spending this time with me, and I hope that you consider a free trial to my service, Joe Duarte and themoneyoptions.com. You can read my articles there. You can read my articles at StockCharts.com. I look forward to our next visit right here at your Daily 5. We'll talk again.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.